Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. And before we get into the video, I want to mention the two donation links down below in the description. If you want to support Ukraine in its war against the Russian tyranny, then feel free to donate to the Ukrainian refugees or to the Ukraine's military, or both if you wish to do so. Obviously, no one's asking for huge donations. We understand that everyone has their own financial, problems and whatnot. But even $5 is going to make a difference. It really will. So thank you for donating. Thank you for understanding. And yeah, let's get straight into the video. Okay, so April 12th is the last time we had an update for Matic. And I did tell you that you could potentially look for a nice little swing trade here where you could enter in this little buy zone that you had at the time, and you could potentially have at least 7% profit. You were able to get 11.5%, but if you sold at the 20 EMA, that was a nice solid 7% trade. And like I said, we hit the 20 EMA, and from there we went down, and this is a nasty downtrend, and we haven't back tested the 20 EMA ever since. So right now, the 20 EMA is something you could look for a back test of resistance. The yellow one is the 20 EMA, the red one is the 55 EMA. Now I'm going to zoom out just a little bit right now to show you the fib that I had set up. So this is the Fibonacci retracement that I had set up, and I've had this for a very long time on my chart. And as you can see, we had this low in July and we had this high in May. So actually the correct way of doing it would be just bringing up the fib a bit higher here. So this would be our new high. And we could fix this up a little bit. There you go. And as I have been saying on this channel for a very long time, if you start losing crucial support zones and previous swing lows, you are going to have targets to the downside. So essentially what you're doing here is you're losing the July beautiful bottom that we had here, this beautiful V-shaped recovery that we had in July, and we haven't looked back ever since. But obviously right now we've been in a pathetic, disgusting downtrend, and no one likes it, and I do understand, but this is a good time to start dollar cost averaging. Now, what has happened is that we even broke below this low over here. So we technically lost it because we closed below. So what do we do in this situation is we remove the fib retracement, right? And we can remove these resistance levels for now. We can remove the yellow arrow, and we bring out another fib retracement, right? So we're going to take this as our swing high and this as our swing low. But this time the extension levels are going to be set to the downside, okay? So there we go. And that's how you do it. Let me just get that straight on. There we go. Okay. So now we have the 1.618 target, which you usually do get to if you lose the first fib level, and the first fib level is currently sitting at 63 cents. Also, this white trend line that I had set up, I've had it for a couple of months now. I don't think I mentioned it in the last video, but I should have, because we had a perfect bounce from this trend line, and you were even up around about 38% from this trend line. And this is basically the previous swing high here that we printed March 10th of last year. And as you can see, you have your swing high. That's where you come down in the next pullback. And, that's exactly what happened here. You have this swing high, you have your swing low, and the trend line connects both points of contact, basically. And if you start losing this first fib, right, which is at 62.5 cents, and you technically haven't lost it, right, you're hovering up around this Fibonacci level. But if you start losing it, which I think you will, you are going to either get supported by the 55 cents support here. As we've discussed, that's the swing high. Below that, you do have the 1.272 Fibonacci retracement at 41 cents. Then you have the 1.414 at 33 cents and the 24-cent price as the 1.618. And if Bitcoin decides to drop back to $25,000, $24,000, I could absolutely see Polygon Matic go as low as 24 cents. And when you were up here, right, thinking that Polygon Matic would be worth 24 cents per token, per coin, would be crazy, right? But these are the opportunities that the crypto space can give you. And if you start entering in dollar cost averaging around these prices here, the next leg up that we're going to have in the market is going to be huge, without a doubt. But if you zoom out, this is still a healthy pullback. I mean, look at this over here. Look at this beautiful wave, right? This is wave 3 of the Elliott wave theory, but I'm not going to get into that right now. So look at this impulsive move, and let's just see from this low, okay, that was a 23,000% move, okay? And from there, we've seen a pullback of 82%. Now, I don't think that's a deep pullback. I don't think this is, a bear market yet for Polygon Matic. This is, yes, we are in a nasty downtrend, but look at the appreciation we had since November of 2020. It's crazy. And what I do think is you can potentially come back down to these prices here. I'm going to bring out a rectangle pattern here. So this over here is your perfect buy zone because you do have a trading range over here, right? So this will have some support. So once you come back down here, you can consolidate in here, up and down, sideways, chop, chop, and then you break to the upside. Hopefully that's what's going to happen. But if you start losing this low, you don't really have a lot of support in here. And the next support trend line that I would look for is 13.5 cents, which is the second fib level. You could get a cheeky, long wick over here and then recover immediately if we end up having a flash crash. Now let's jump into the daily RSI. And yeah, we lost the support of this trend line. This is what I set up in the last video. April 12th or 11th is when we had the bounce. We had a nice recovery, and then we lost the support, and we even back tested it as resistance here. And we were in the oversold zone, and now we're recovering from it. But I do think this is a great entry for Polygon Matic. And each time you were in this zone, as you can see, you've had very quick and strong recoveries to the upside. So I do think entering now is very smart. And I do want to switch over to the Binance chart right now. Okay, moving over to the weekly chart. The orange EMA over here is the 150 EMA. So we are holding it as support as of right now. We did have a wick below, but I want you to bring this EMA out to your chart just to see once you start losing that support, this is the trading range that I would look for over here. Okay, so this is where I would look for support, right? Anywhere below 40 cents is going to be a great entry, all the way down to 26.5 cents. Because this is where you have the trading range over here. This is where you consolidate it a bit. If you start free falling, then you can see that you don't really have much support here on the weekly chart. So if you start falling, you can potentially free fall all the way down here to 3 cents. I don't think that's going to happen unless Bitcoin drops, to $15,000 or something, which at the end of the day still could happen. Do I think that's going to happen? No. I don't really think so. In fact, I do think we are getting closer and closer to the bottom, and I don't think we have printed the bottom just yet. I do think $24,000 is going to be our local bottom. And as you can see, the 20 EMA is about to cross below the 55, effectively giving us the bearish cross on the weekly, and that would be your confirmation of the downtrend. And after you get the bearish cross on the weekly, you typically see further downside. So potentially entering this buy zone is what I'm expecting. So set some buy limit orders if you want to get Matic at these cheap prices. Now, getting into the stochastic on the weekly chart, you're extremely oversold right now. And as you can see, every time you were this oversold, you had a strong impulsive move to the upside and you got overbought eventually. Looking at the weekly RSI, you can see that we're approaching the oversold zone very quickly. If you get below the index of 30, I would suggest, well, I'm not suggesting anything because I'm not a financial advisor, obviously. But if we do get below the index of 30, that is a brilliant opportunity to get into Polygon Matic. And obviously the MACD, the good old MACD, we got a bearish cross here January 17th. So if we take a look at the price action, January 17th, so from there, you're down 74%. So if you took some profits or you exited your positions January 17th, you could have bought back in 73% cheaper. And that is how you use the MACD alongside the other indicators, because you were on your way down to the oversold at that time, and the the RSI here, well, the RSI was in the middle here, right? So you couldn't really tell anything by looking at the RSI. But yeah, that's just some of the oscillators on the weekly chart, and you're getting pretty overextended to the downside on the MACD as well. Look at this. You just had the bearish cross 4 months ago, and you had this sideways movement over here. And as you can see, when you have the bullish cross, let me just zoom in a little bit here. Once you have the bullish cross, this is the type of appreciation you can see, right? So you need to wait for that bullish cross. That would be your confirmation of the downtrend. But keep in mind, this is a lagging indicator, which means that the uptrend is going to start, and only afterwards are you going to get the confirmation of the trend. Now, if I missed out anything on the charts, please let me know down below in the comment section. Also, feel free to follow me on Twitter. I do post technical analysis and some interesting updates on there as well. I do have a Patreon. It's a great way to support me and a great way for you to get more exclusive content, low cap jump calls, my trading alerts, buy, sell alerts, all that type of stuff. Project reviews, TA requests, video requests. But if you don't want to use Patreon, you can become a member as well. I've just started memberships on this YouTube channel, and yeah, click the link on your screen right now and you can become a member or watch my previous update on AVAX. That is pretty much it. I'll catch you in the next one. Goodbye and good night.